One way to invest in the stock market is or the best way to invest in the stock market is to buy an index. As Warren Buffett says, he would put all his money in S&P 500 and call it a day rather than trying to buy and sell, timing the market. Because once you buy the index, you will beat vast majority of people who are trying to buy. Again, is Money Mind channel. If it's your first time, subscribe and like and share your view, which fund you like. So let's go. The fund we're discussing today is VOO, which is one of the top funds invested in the world or in the US. So the name is Vanguard S&P 500 ETF. And the ticker symbol is VOO. So management style is index. Asset class is domestic stock general. Category is large blend. Risk, it's about 4. On a scale of 1 to 5 is 4. Expense ratio is about 3. Year-to-date return, it's about minus 16. With no market has crashed or it's pretty much bear market. So we are on 16%, and market price as of today, which is August 31st, it's about 363 and 17 cents. That's US dollar. And it's a pretty much close to its NAV or net asset value, which is a pretty much the same. And you want to see, when you look at an index fund or any fund, you have to look at the price versus NAV. They have to be really close, because if they have the difference in price, then there's something wrong, So this is a perfect. You can see it's pretty much NAV. So today we'll go on overview, performance, price, portfolio composition, distribution, fund management. So overview of the fund, as we've said, the ticker symbol is VOO.IV, or in short is VOO. Management style is index. Asset class domestic. It's a domestic stock, which is a US. Category is large blend. Inception date, when the fund was actually created, Vanguard, when it created this fund, was September 7th, 2010. Rating, as we've said, is 4 from 1 to 10. It says an investment in the fund could lose money over a short or even longer period. You should expect the fund share price total return fluctuate within the range like the fluctuations of the overall market. So, just don't see, oh, it just crashed. You sell and buy, you sell and buy. It's just normal. Will crash, will come back again. Performance as of today, we've seen it's about minus 15. So it's crashed. It was all the way to 22, I think, and it came back. Now is about 16. Year-to-date return is pretty much that. Product summary. So let's do summary of the fund itself. Invest in stock in S&P 500 index, which represent about 500 biggest US companies. Goal is to closely track the index return, which is considered a gauge of overall US stock market. Offers high potential for investment growth. Share value rise and fall more sharply than that of fund holding bonds. Of course, we know bonds is more stable, so this will fall more. So do not compare, because I see this is a mistake that a lot of people doing, is trying to compare, bond fund, for example, bond fund and S&P 500, it's up on orange. They won't perform the same. So fund management, it's Vanguard equity index. So Vanguard is the people who actually created all this index thing, and they are the manager of this fund. Price we've seen is 363, which is with its NAV or net asset value. Expense ratio, where you're going to pay, is 0.03. So it's very little, very little. Market price changes of today went down about like 0.7, quarter of percentage, 0.75%, or about $2.85, which is the same. The NAV or net, the NAV, net asset value, and also which it tracks its index, for pretty much the same. performance and fees. We can see the performance here. We don't want to go, there's a summary. This is general, quarterly, annually, cumulative. So we don't have to go all that. We can just see since inception, since 2010, the fund has returned. The fund itself has returned about 14%, which is a pretty good. In 10 years, about 13% annually. These are annual return. 5%, 5 years about 12%, 3 years about 13%. If we look at every annual basis, about -4, right? Year to date, which is today, this year in 2020, from January to today, which is YTD year to date, is -12. Expense ratio we've seen is about 0.03, but compared to other funds of the similar composition, will be about 0.83, which is a huge difference. Benchmark S&P 500 index. If we look at beta, how risky it is as compared to the market itself, of course, is 1-to-1 because it's S&P 500. Dow Jones US total stock market is about 99 to 96 beta. So Dow Jones is a little bit less volatile, right? And we've known because only 30% is more of, doesn't have as many tech stocks, so it's more steady. Dow Jones Industrial. We've seen the price. We can go to historical. We can go to portfolio composition. So number of stocks, of course, is S&P 500. It's composed by 500 companies, but here you can see it's 503, give or take. It's about 504, 503, because there's always the 3-4 companies. Median market cap is about 165 billion, right? Earning growth rate is about 20%, which is pretty good again. P ratio 20 at this moment. So price per earning, we compare all the stock together and then divide by their price, we get about a 20. So PE of less than 20 is okay. I mean, PE of less than 10 is pretty good, but it depends on the company. But for S&P, it's always been about 20%, 17 to 20. That's a normal over a long period of time. Foreign holding, we can see here, it's pretty much 0. Fund total net asset at this moment is about almost 800 billion, right? That's a huge amount of money. Share class total net asset is about 271 billion. Weight exposure. So as you know, it's S&P 500. It's composed of 11 sectors of the market. So we have communication, 8.4. We have consumer discretionary, which is about 11. Consumer staples, 6.6. You can see right here. Energy is about 4.4. Financial is 10. Healthcare is 14. Industrial 7. Information technology is 27. Material is about 2. Real estate 2. Utility is 3. So we can see financial takes a big chunk. Information technology, which is tech companies, it's about bigger. So financial and those will take a huge chunk of the S&P 500. And you can see 10 top holdings. We can see there's Apple, Microsoft, Amazon, Tesla, Google, which Tesla, by the way, was just incepted, was actually Tesla joined S&P just recently, not too long ago. We have Google Alphabet, and we have Google mother company, which is the old Google pretty much. Berkshire Hathaway, that's Warren Buffett company, which is more financial. And we have United Health Group, Johnson & Johnson, and NVIDIA. Those are 10 top holdings. Distribution, it does distribution quarterly. So every 3 months they do distribution. And we can see here the history of dividends. So it is about 2%. So that's all. There's not much really change of S&P 500 except you would see the usually these sectors usually outperform each other, and every quarter, of course, Vanguard would come back and rebalance this. You don't have to worry about that. They rebalance it for you. So that's all about S&P 500. If you like this fund, leave your comment. What other funds do you invest in? What other funds of S&P 500? We know there are a lot of them. There's SPY, and there is more. So this will be just generic S&P 500 for any type of S&P 500 you want to do, whether you live in the US or you live in Australia, you live in Canada, you live whatever, it does fall S&P 500, S&P 500. There are different ticker symbols, and you can go on Vanguard website in each countries. You can see they do have different funds of S&P 500. And as I say, this is one of the best way to invest your money and relax and keep adding your money. So thank you very much for watching. If you have any question or if you have any comment, just leave it below. And if it's your first time, you haven't subscribed, please do so.